Imagine waking up one morning to discover that the money in your bank account never really existed. Not stolen, not hacked, not lost, just never real in the first place. Because what if the financial world you trust, the currency you earn, save, and spend is not wealth, but an illusion carefully engineered to keep the world dependent on borrowed reality? Today, we're going to explore a truth so deeply buried under economic jargon, political speeches, and media distraction that most people will never notice it, even though they live inside it every single day. This is the story of how money became an illusion, how global debt became the foundation of modern civilization, and how the world got trapped inside a system that only works as long as you, Don T, ask how it works, setting the stage background and teasing the twist to understand the illusion. We need to go back, not to Wall Street, not to the Federal Reserve, not even to the gold standard. The solution, ironically, was to create even more debt. Governments printed money. Central banks dropped interest rates to zero. Trillions in bailout money appeared from nowhere. The illusion grew stronger, but so did the danger, because the more you stretch an illusion, the easier it is for people to see the cracks. Section 5, Failed Fixes. Why the system can't be reset. Since 2008, the world has tried everything. Negative interest rates, trillions in quantitative easing, unlimited government borrowing, massive stimulus checks, digital payment systems, central bank planning on a scale never seen before, and yet global debt has now passed $300 trillion. The U.S. alone owes over $34 trillion. No, countries with collapsing currencies still borrow more, and central banks still create money from nothing. Every solution only made the illusion bigger. The world is now locked inside a system where debt must grow, money must expand, inflation must continue. People must keep believing in something that no longer has a physical foundation. It's not a conspiracy. It's an architecture, intentional, profitable, and almost unbreakable. Section 6. Modern Parallels. History repeats in real time. Look at the patterns. Ancient Rome debased its currency until it collapsed. The Weimar Republic printed so much money people burned it for heat. Zimbabwe watched trillions become worthless. Argentina repeats the cycle every decade. Lebanon's banking system shut down overnight. Every historical collapse followed the same formula. Value disappears. Debt rises. People lose trust. The system resets painfully. Today, the world is seeing similar signs. Inflation rising globally, currencies weakening, central banks buying more debt, nations printing trillions. Digital money becoming normal, real wealth concentrating faster than ever. The illusion is not breaking today, but it is thinning. Final section: takeaways, warning, and call to action. 3 takeaways. Modern money is not wealth. It's a claim created from debt. Understanding this changes how you see every financial headline. The system requires endless borrowing to survive. Debt isn't a problem. It's the product the system sells. Financial illusions collapse when trust collapses. Real danger isn't inflation or debt. It's people losing faith in the illusion. Warning. We are moving toward a future where money may not be printed, but programmed. Central bank digital currencies, algorithmic interest rates, and fully trackable transactions are not science fiction. They are prototypes. When the next crisis forces another fix, the illusion may evolve into something even more controlling and less stable. Call to action. If you want to understand how money, power, and global debt really work, beyond the headlines, beyond the political noise, beyond the illusion, make sure to subscribe, like, and share this video, because the more people understand the truth, the harder it becomes for the illusion to control them. We go back to a single idea. Money doesn't need to be real. People believe it is. It's the principle that quietly replaced gold with paper, and replaced paper with numbers on a screen, and now threatens to replace those numbers with something even more abstract: programmable digital credits. But who started it? Why was it created? And how did this illusion not only survive, but become the most profitable system in human history? The answers lie in a sequence of events: the origins, the rise, the breaking point, the fallout, and the failed fixes that still haunt us today. Let's start at the very beginning. Section 1. Origins. When value stopped needing value centuries ago, wealth was simple: gold, silver, land, grain, real labor. Then came banks. It began with a harmless idea: we'll store your gold and give you a receipt. Soon, those paper receipts began circulating as money themselves. People trusted them more than carrying metal. Then banks noticed something dangerous. Unprofitable. Most people never came back for their gold. So if a bank held 1,000 units of gold, it could print 2,000 receipts, then 5,000, then more. The first financial illusion was born, creating claims to wealth without the wealth. This was the seed that would later grow into fractional reserve banking, government bonds, and modern digital money. But the real twist came centuries later in 1971. Section 2. The Rise. When money lost its last anchor on August 15, 1971, U.S. President Richard Nixon announced something that shocked the world. The dollar would no longer be backed by gold. This single decision removed the last physical anchor from global money. It meant money was now backed by nothing. Governments could print unlimited currency. Value became a matter of political decision, not economic reality. But here's the twist. Most countries followed, not because they wanted to, but because they had no choice. The entire global financial system had become tied to the U.S. dollar, and when the dollar changed, everything changed.
The rise of borrowed reality began.
Governments realized a powerful secret. If money comes from debt, then debt can grow forever, and so it did. Global debt started exploding from billions to trillions to hundreds of trillions, but every illusion expands, till something breaks. Section 3. The breaking point. When money multiplies without limit as debt ballooned, economies seemed to grow. Stock markets soared. Houses got expensive. Governments spent freely. But beneath the surface, a silent breaking point formed. Here's why. Money today is created through a simple mechanism. A bank makes a loan. The loan becomes new money. The debt must be paid back with interest. But the interest doesn't exist yet. It must be created through more debt. This means the world must borrow more money every year just to avoid collapsing. When growth requires more growth and debt requires more debt, the cycle becomes unstoppable and unsustainable. Economists call this a debt-based monetary system, but let's call it what it really is. A treadmill that speeds up every year, while humanity tries not to fall off. Then came the moment that exposed the illusion. Section 4. Fallout. When the illusion glitched in 2008, the world's financial system didn't simply crash. It briefly showed its true form. Banks froze. Mortgages collapsed. Trillions evaporated. Economies stood still. For a few terrifying weeks, the world realized. Money is only real as long as people believe it works. So what was the solution? Not fixing the system. Not restoring value. Opening hook, 0 o'clock, 2045 visual, dark, moody imagery of stacks of money, stock tickers, and bank vaults narrator. Imagine a system where wealth flows not to those who earn it, but to those who control the levers behind the scenes. A system where billions are created and destroyed without your consent. A system so quiet, so invisible, that most citizens never realize it exists. Yet it shapes every paycheck, every investment, every decision you make. Today, we uncover how central banks quietly control wealth and why you've been paying the price all along.